Morning, everyone. This is Andrew. I want to discuss an idea that is solely educational, that something to consider. And again, you make your own decisions. It's something that I'm looking at. I'm looking at the market, and what I see in the market isn't looking overly favorable. However, what's standing out is Ford. And to me, Ford might want to be, you might want to consider putting Ford on your watch list. There's new, like you always look for a catalyst, and there are many catalysts. Besides having this super cool Mustang, they're basically the number one car seller in the UK. I was reading more and more about it. I mean, I looked at it from a fundamental and then also a technical and try to find something new. And Ford kind of ticks those boxes, as they say. And in 2030, they're going to start going out with all electric vehicles. So, what I want to show you, let me just jump over to here. I mean, here's this really cool car, their Mustang, that is increasing. The demand, the sales, a lot of interest in it. Um, what I always talk about is the technicals, and the technicals really there's some issues. Um, you can see Tesla's above them. I look at IBD, Investor Business Daily. The composite rating means they're doing better than 93% of all stocks. But the problem is the stock market's under pressure. Before I go further, I want to accentuate what does it mean under pressure. You have many, many stocks, and even in the electric vehicle space, that are, for lack of better words, getting hit. I mean, to me, there's a guardrail. My guardrail is a 20-period exponential moving average. And you can see how NIO ran up and then basically got taken out below the 50, and we're having almost a crossover the 20 and 50, which is a rather negative sign. You look at Target. Target also, look at the volume on Target. Negative, very, very negative. The first time that it's below the 50-period exponential moving average and with high volume. I mean, whoops, let me see if I can just get rid of that one. Leave. Okay. Zoom, another one. And the Zoom is on my buy list, actually, my personal, where this is a Jesse Livermore pattern where people are shaken out. But this also is a massive shakeout where you gap up massively and then turn down. Very, very negative. And an all-in-all favorite, Tesla. Everybody's favorite. But also, if you notice, it's living below the 50-period exponential moving average. That's not good. This was a setup point here, was a breakout point, or here was even a better breakout point at around 466. But here it's a negative. Compare that to Ford, which is very interesting. We had a breakout. The relative strength line is at a 52-week high. Yesterday, it was up 4.8%. General Motors is up 3%. It has the story of electric vehicles. They're more of an international company that's been around forever. It's something to watch. I mean, to me, you had a lot of volume here. You also had tremendous volume here. Look at this volume. And then here's your buy point, right, pretty much right there. You can make this a little bit bigger. But the negative is the market. The market doesn't look that great. I mean, this is some negative action. This is like, who knows? No one knows which direction we're going to head. But you want to have confirmation. Really, again, what I do, and again, this is all educational, is I like to see when the 20-period exponential moving average is above the 50. When it's below, or the prices are starting to be below, and you have large volume here, this is negative volume, it kind of makes it very, very skeptical. And the other thing that made me also skeptical is how quick we sold off here and how far we were extended from the 50-period exponential moving average. So in general, what I'd like to just kind of reiterate is consider something new. Ford, makes my watch list from a technical basis. Fundamentally, it can be a little bit better. There are issues. I mean, there's nothing perfect. It's just something to consider. I hope you like my channel. I hope you subscribe to my channel in order to learn more. Thank you.